The cryptocurrency community is abuzz with speculation about PiNetwork's potential listing on Binance, one of the world's largest and most influential crypto exchanges. Social media platforms, forums, and Telegram groups are flooded with claims that PI could soon debut on Binance, sparking excitement among its millions of global users. However, separating fact from rumor requires a closer look at PiNetwork's development status, Binance's listing criteria, and the broader implications of such a move. Understanding PiNetwork. A brief overview. Launched in 2019 by Stanford graduates, PiNetwork aims to democratize cryptocurrency mining by allowing users to mine Pi coins via a smartphone app. Unlike Bitcoin's energy-intensive proof-of-work model, Pi uses a consensus mechanism called proof of individual to validate transactions, theoretically enabling scalability and accessibility. The project has attracted over 30 million users, many drawn by the promise of earning free crypto without specialized hardware. The Binance listing hype. Why now? Rumors of a Binance listing likely stem from several factors. 1. Community momentum. Pi's massive user base, particularly in emerging markets, creates organic buzz. Excitement often translates into speculative claims. 2. Past exchange listings. Smaller exchanges like Bitmart and BitGet have listed Pi's testnet tokens, fueling hopes of a major exchange debut. 3. Binance's history of innovation. Binance has listed high-profile projects early, e.g. BNB, SOL, leading some to believe Pi could follow suit. Yet Binance's stringent listing requirements make such optimism questionable. The exchange evaluates projects based on technological maturity, team credibility, regulatory compliance, and market demand. Pi's lack of a mainnet, unclear tokenomics, and regulatory gray area pose significant hurdles. Regulatory and technical challenges. A Binance listing would require Pi to navigate complex regulatory landscapes. Cryptocurrencies face varying degrees of scrutiny globally, and Pi's team has emphasized caution to avoid legal pitfalls. For instance, the U.S. Securities and Exchange Commission, SEC, has cracked down on tokens deemed unregistered securities. Pi's white paper stresses decentralization as a safeguard, but until the mainnet launches, its compliance status remains uncertain. Technically, Pi's transition to mainnet hinges on achieving sufficient decentralization. The team has outlined a multi-phase roadmap. 1. Phase 1. Mobile app mining completed. 2nd. Phase 2. Testnet development with node validation ongoing. 3rd. Phase 3. Mainnet launch with full decentralization and app ecosystem pending. Without Phase 3, Pi lacks the infrastructure for exchange integration. Even projects with functioning mainnets often wait months for Binance listings, suggesting Pi's timeline may stretch beyond speculation. Market dynamics and investor sentiment. Cryptocurrency markets thrive on anticipation, and Pi's community-driven model amplifies hype. A Binance listing would undoubtedly boost Pi's price, as seen with other Binance-listed tokens. However, this also raises concerns about market manipulation. Unverified claims on social media could artificially inflate Pi's perceived value, creating a speculative bubble. Moreover, Pi's current testnet tokens hold no real-world value. Users are advised against trading them, as the official mainnet migration will likely require KYC verification and wallet transfers. Fraudulent actors may exploit the Binance listing rumor to scam investors, underscoring the need for caution. Comparisons to similar projects. To contextualize Pi's potential, consider projects like Cardano, ADA, and Solana, SOL, which debuted on Binance after years of development and mainnet readiness. Pi's lack of a clear use case beyond mining, such as smart contracts or DeFi applications, could deter exchange evaluators. Binance prioritizes projects with tangible utility and ecosystem growth potential, areas where Pi remains vague. The road ahead. Realistic expectations. Pi's core team has consistently emphasized patience. In a recent update, they reiterated the need to prioritize security and decentralization over speed. Rushing a mainnet launch to chase exchange listings could compromise the network's integrity, risking long-term failure. For a Binance listing to materialize, Pi must 1. Launch its mainnet with verified decentralization. 2. Demonstrate scalable use cases, e.g., payments, dApps. 3. Secure regulatory clarity in key jurisdictions. 4. Meet Binance's rigorous technical and compliance standards. Conclusion: proceed with caution. While the prospect of a PiNetwork listing on Binance excites holders, current reality suggests such a move is unlikely in the near term. The project's developmental stage, regulatory uncertainties, and Binance's exacting criteria all point to a longer timeline. Investors should focus on Pi's roadmap milestones rather than speculative noise. Ultimately, PiNetwork's success hinges on executing its vision of a decentralized, user-friendly blockchain. A Binance listing would be a milestone, not a goal. As the crypto adage goes, don't trade hope. Until official announcements emerge, skepticism remains the wisest stance. In the meantime, the community can contribute by running nodes, fostering adoption, and advocating for Pi's mission. Whether or not Binance comes knocking, Pi's true test lies in building a sustainable ecosystem that outlives the hype.